Hello, welcome to Santiago, Spain, terminal point of the famous El Camino Trail that winds through northern Spain and the heartbeat of Celtic Spain, Galicia being in the northwest of the country, just north of Portugal. The S&P closed virtually unchanged from where it was the prior week. We did make new all-time highs earlier in the week, and we started to see some heaviness and some increases in realized volatility over the course of the few days, predominantly in after-hours market activity. Realized volatility in equities has been the missing ingredient to any kind of sustainable increase in implied volatility that we might see in, say, VIX index or implied volatilities on S&P options, products that trade in the VIX complex, futures, that type of thing. We found some really interesting cross currents. The beginning story for over the last couple of weeks has been several occasions where we've had a spill in the early market action, very frequently in after hours, and then almost without fail we see a recovery. The recoveries are very decisive. They are not so much spiky where they immediately head up for the most part, but they are sort of just a bottom with a gradual increase that frequently results even just in modest gains for the day. This past week was no exception to that rule. Another point worthy of mention for this past week was the movement in the at-the-money ES volatility. We saw a pickup of about a point and a half in the quarterly contract, and the monthly and weekly contracts readjusted higher fairly sharply. I believe maybe 3 points for the weekly. This is a little bit different from what is typical. Usually the quarterly follows more gradually what's going on in the weekly and the monthly. Over the past week, it looks as though the who's driving the movement was reversed. Another clue or tell that might suggest higher levels of volatility on the horizon has been in the 8 straight down days in the Velocity Shares midterm inverse VIX ETN. That's a mouthful. We've seen 8 straight days down. The ETN trading down about 10% off of its recent all-time highs, maybe providing a clue that volatility is going to pick up over the next several weeks. So we're seeing a lot of signs that would indicate that increases are going to happen. Whether or not they actually will, time can only tell, and it's really going to come down to whether we see sustained pickups in realized volatility. Thank you very much. A bottom level of 8.99. Frequent market volatility bulletin reader and commenter Igor Voss claimed over that weekend that we would see an immediate gap up and a spike in spot VIX in the coming week. And as a matter of fact, that's exactly what happened. We never really spent much time at all below, say, 9.4, 9.5 on spot. Furthermore, even when the spot index was just falling through the floor, we never really saw buy-in from the futures contract.